It was another good showing on Wall Street as we saw the S&P 500 and the Nasdaq Composite both go up for the fourth straight day. And in both of those cases, we also hit new all-time intraday and closing highs here today. So another strong move there, in many cases led by some of those familiar technology stocks. The Dow Jones didn't fare quite as well. It was down a touch here today. Many of you probably heard the news of a big shakeup in the Dow Jones Industrial Average, where three current constituents were being removed and three new ones, of course, were being added. And as was the case, all three that were being kicked out were down in price today, and all three that were added were up, and in some cases significantly so. So we'll take a look at all that, see what it means for our posture going forward. We'll then get into a trade application example where I wanted to focus on a fintech stock that not a lot of people are familiar with, as it's somewhat of a newer IPO stock to the market. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's August 25th, 2020. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe. While you're over there, check out our description area to sign up for our email distribution list, so that way you're reminded of whenever these videos get posted, and also gives you the stocks that are showing overbought and oversold cluster signals within the S&P 500 each day. In addition to that, we're heavy users of Twitter. My handle is @BrandonVanZee. I'd encourage you to follow me. And in addition to that, please click like and retweet on these Market Outlook related tweets if you get value out of them on a daily basis. Lastly, we have a presence on Facebook as well. Feel free to join our group at the web address you see embedded in that logo in front of you. All right, let's jump into our charts. And as you can see, I've got chart 4B pulled up here in front of us. This will give us a nice high-level overview as to how the major markets here in the United States settled out here today. And as I mentioned in the intro, we had positive performance here today for the most part. S&P 500 was up 0.36%, and you can see that we closed at a new all-time high yet again. Also, the Nasdaq Composite was up 0.76% today, so that was our leading index of these four. Once again, of course, a lot of technology stocks there in the Nasdaq, and we did close almost at a brand new all-time high there as well. In fact, I shouldn't say almost. We did close at an all-time closing price high, but we almost closed at the high of today's session as well, just off of it by a point or two, but obviously very strong price action there within the Nasdaq, and that has been the case for many months at this point. So we'll probably sound like a broken record when we discuss the Nasdaq, but that is where the action is, and that is where we find our hottest stocks right now. The Dow Jones did not fare as well. As I mentioned in the intro, it was the only one of these that finished lower. It was down 0.2% today, as we had a lot of news about the Dow Jones Industrial Average here over the last 24 hours. Late yesterday, it was announced that the Dow was going to go through a major shakeup. Now remember, the Dow does not replace candidates nearly as often as something as the S&P 500. Part of that's just a numbers game. There's 500 stocks in the S&P 500, only 30 stocks in the Dow. And typically you see that the Dow kind of stagnates and stays stale with the same 30 companies for sometimes years on end. So it was a little bit of a surprise that all of a sudden 3 out of the 30 stocks were going to be swapped out. That's 10% of the index removed. And part of the reason behind it, from my understanding, is that Apple, of course, is currently part of the Dow and makes up a significant chunk of the Dow, because the Dow, as we've explained in this video many times along the way, is a price-weighted index, and therefore the higher the price per share, the more important and influential that company is to the Dow Jones Industrial Average. And so with Apple going through their stock split here coming up in the next couple weeks, we're going to find that Apple's share price is going to go down significantly and therefore will be less influential on the Dow Jones Industrial Average. And sounds like they do want technology to have a stronger presence. And so what they chose to do is add Salesforce.com into the Dow, and in doing so replaced ExxonMobil, which the first time that Exxon was added to the Dow was back in 1928, when the Dow expanded from 20 components to 30. So the Dow has literally been in the Dow, or I'm sorry, the Exxon has literally been in the Dow Jones Industrial Average the entire time all of us have been trading, even if you were born quite some time ago. So it was quite the shakeup there. And keep in mind, Chevron stays in the Dow, but Exxon will be kicked out for the first time in many, many decades. And the other two changes were Amgen replaced Pfizer, or I should say will replace them. These index changes will take place officially at the end of this month. So Amgen's replacing Pfizer, and then we also heard that Honeywell is going to replace Raytheon Technologies, which is kind of the combined companies of the old Raytheon and United Technologies that took place earlier this year after spinning off Carrier and Otis. So anyway, if we were to look at kind of those 6 companies involved in this change in the Dow, it is interesting to note that if we look at the 3 that got added, in this case CRM for Salesforce, it was up 3.6% today in the normal session. Now, I know this is probably hard for some of you that are not watching this on a big screen, but over here to the right of that, you'll see a B and an A for a bid and an ask. Salesforce is exploding higher after hours tonight. They just reported their earnings, so interesting 1-2 punch of news. Last night, they get added to the Dow. Tonight, after the bell, they announced spectacular earnings, and that stock is going to open up at a new all-time high tomorrow at around 241 if this keeps up. That's way up here on the chart. So anyway, today, CRM was up 3.6%. If we look at Amgen, another stock that was added to the Dow, or that will be, it was up 5.3% here today, so a big move higher there. And remember, healthcare itself had been suffering. Remember, the last 2 market outlook trades that I've done with you are bearish healthcare trades, and by the way, they've both gone down since we placed our trades. Even though that the markets continue to hit all-time highs, healthcare continues to struggle to a degree, and Amgen was right along in that boat with a lot of those healthcare companies. It had been down 5 days in a row, but today apparently this was just the news it needed, and erased all 5 days of those losses. Now is trading back above its 30-day moving average there with a 5.37% increase today. And then Honeywell was the third company that was added, and it was up nicely today as well, a 3% move out of Honeywell. And you can see that was enough to, at one point on an intraday basis, push us up and through this prior high that we had set right here on the 5th of June. So quite a long time ago. Very interesting. Now, let's take a look at all of those that were kicked out, because we just saw spectacular returns on the 3 that were added to the Dow. ExxonMobil was the first one that got replaced by CRM. It was down 3% here today and hit a new multi-month low here down at 40. So it's not trading as low as it was back in March, but it is trading at its lowest point in the last 3 months. So people selling that off on hearing the news of them getting kicked out of the Dow. We also saw that Pfizer is kicked out of the Dow. It was down today as well. Not too much. It was only down 1.1%. It's a rare healthcare stock that remains above its rising 30-day moving average in this case. But it was still down over 1% today on a day when the stock market hit an all-time high. And then Raytheon was the third one. And Raytheon was also down over 1%, 1.5% in this case. So kind of interesting there to see that breakdown. The 3 stocks that were added were up a massive amount because in many cases they were surprise candidates, and then the 3 old school names that were removed were all down at least 1%. And then, by the way, before we move on here, the Russell 2000 was up today. It was only up 0.17%, but you can see it's kind of coasting nicely above that rising moving average as well. As it stands, and we look back at the Dow here, we still have bullish intermediate postures across the board. So remember, when you're looking at this particular chart, the background color being green at this particular time will tell you that we do have a bullish intermediate posture, and that can mean one of two things. Either the green intermediate line underneath each of these charts is heading up between 20 and 80, or it's just simply in the upper reversal zone, and it's that second one there that represents all four of these charts. You'll notice that the reading within the green label that says intermediate next to it, in all of those cases, it's above 80, and therefore all of these are considered strongly bullish as a result of that. It is the Russell 2000 that is at most jeopardy of losing that strongly bullish posture, because remember, if it continues to fall, and you can see this green line is falling right now, if it falls below 80, at that point the background color will change to pink, and we will go to a weekly bearish posture. But we don't want to count our chickens before they're hatched, and so we'll wait for it to occur. But right now it does appear that the Russell 2000 would be the first one to kind of break down from that perspective. All right, let's go ahead and take a look at our 3 green arrows set up now, and this will be chart 4D. So as we're looking at this, you can see that 2 of our charts have 3 green arrows and 2 do not. And you know, if you didn't even look at the charts, I'm sure you could probably guess which 2 have them and which ones don't, considering my conversation with you just a moment ago. The 2 leading indices in this market right now are the NASDAQ Composite and the S&P 500, both of which hit all-time highs here today. Now you'll notice that with today's move on the S&P 500 being up 0.36%, we did have a green arrow take over on the MACD histogram, telling us that we have momentum back into the shares to the upside. And so that's why you see that background color of the chart here on chart 4D painted that light pink, or I'm sorry, light green color in this case, representing the 3 green arrows for the 30-day moving average, MACD histogram, and the stochastics ranking right there. Remember, the NASDAQ had already been in a 3 green arrows mode for really the last 6 sessions, so it's not that big of a deal, just to recognize that it is still in that mode, whereas these other charts here, the Dow Jones and the Russell 2000, both have a mix of green and red arrows. They both have red arrows on the MACD histogram, and in addition to that, the Russell 2000 also has a red arrow there on the stochastic. So again, this market is being led by the NASDAQ, and if there is a laggard, at least on a relative basis, you would call that the Russell 2000 at this current time. All right, let's go ahead and take a look at our 1040 crossover method now. And on the 1040 crossover method, you can see that we have green background colors across the board. A reminder that on this chart, which is 4C, for those of you that are premium market scholars that are following along at home with your own chart setups, that when we have the green background color on this particular chart, it means that from a longer term perspective, we now have bullish crossovers that have taken hold, sometimes known as golden crosses. And what we use here in this case is a 3-year chart. So each of these 4 charts in this case are 3 years in length, and each one of the candles you see is 1 week in length. So admittedly, this is only Tuesday, and therefore anything can happen between now and Friday's close, but with the crossovers having taken place in some cases a couple weeks ago, in some cases many months ago, I don't anticipate that we'll have a major crossover regardless of how good or bad the rest of this week will be. You can see that the most recent crossover occurred with the Russell 2000 right there. And we see the orange line cross up and over the blue line. The orange line is the 10-week moving average. The blue line is the 40-week moving average, and we consider that a positive sign when the more sensitive line that tracks the smaller number of time crosses up and over the less sensitive line that tracks the longer amount of time. So in all 4 of our cases, we do have bullish longer-term postures as well. All right, now that we're about at the halfway mark here, let's see if this will be one of those abbreviated sessions or whether it will be a full-length session. And so for that, I'm going to pop on over here to the internet, see if we got up and over 100 likes on Twitter the last time I did the video. And it appears that we did, but just barely. 101 likes. So I know many of you click like for us each and every day, and we thank you for that. It's our way to justify the time it takes and the resources out of our day to produce these videos for free, as we don't make any money off of doing them. So we need to be able to make sure that we're getting maybe a little bit of promotional or marketing activity out of it, and we use Twitter as our main kind of social media platform to do that with. So many of you have committed to clicking like for David and I each and every time we do the video as your endorsement of hoping that we'll do them as often as we can for free. So today we got to 101, so there were 2 of you out there that had you not clicked like, our video would be done right now. We'd be doing a half video at this point. But as is the case, 101 got you there. We'll continue to push forward and give you an additional 15 minutes here tonight. So again, if you get value out of these videos, make sure you are clicking like for us on Twitter. There's 4 different ways you can do it. You can do it right here on our website by clicking that little heart right there. You can go directly to Twitter and you'll find the most recent market outlook pinned to the top of my timeline, or you can go over to the description area of the YouTube video itself and there will be a link to the tweet. And then last but not least, in the email that we send to those of you on our distribution list, you'll also find a link directly to Twitter. So there's 4 different ways for you to do it if you choose to take that 5 seconds out of your day to support our video. Also, we had a great class here earlier today on the in the dividend growth investing class. We talked about the energy sector and whether it's worthy or not of our investment from a dividend growth investing perspective. So if you're interested in that, make sure you come up here to the trading rooms area if you're a premium or plus member of ours and watch that recording. David taught his directional option strategies class today as well for those of you that are interested in that. Tomorrow I'll be teaching factor-based swing trading. Some of you might have seen the trade alert that come through here yesterday that we had another max win in that particular class, so we're excited about that, and we'll see if we can find another one tomorrow morning at 10 a.m. Eastern Time. David will be teaching his options inventory class tomorrow at 2 p.m. Eastern Time. While we're over here on the internet, let's check out the sector selector, kind of get a lay of the land as to how sectors are rotating here, if any, and we didn't really see much change week over week. Of note, we did see energy kind of fall flat on its face. Remember, this is put together on Friday night, so it would not have included today's move lower and Exxon and Chevron and those other names that we were talking about before. But nonetheless, it's not a surprise, right? Energy has been dead last many times over recent years. So they're back to that dead last location. Real estate has made an interesting move up here recently. So keep your eyes on real estate. They've kind of stabilized a little bit here more recently. And then the other one I wanted to point out was technology. For the second straight week, we have seen an improvement in technology. That's good to see because it was a little bit peculiar to find them kind of fall out of bed here about a month or so ago, and they have been kind of rallying back. They're not quite into the top 3 yet, but they're knocking on the door of that, just sitting there outside of that at the 4th slot at this current moment in time. And our trade application tonight will be a bullish trade on a technology company. So to help support that decision is my understanding that technology itself has shown improvements on a relative basis versus a lot of these other sectors that are out there. Let's go ahead and get some 12 grid analysis in on the sectors as well. So 5C is the chart I traditionally use over back on Thinkorswim for our 12 grid analysis on sectors. And a reminder that when we're looking at these 12 grids, the background color of the chart will be either green or pink, depending upon whether the posture, according to the intermediate line on the market forecast, is considered bullish or bearish. And so as you can see, we've got 3 pink charts on the board right now. No surprise that the dark pink shaded background is energy, which I just mentioned a moment ago on my sector selector is dead last as well. So we do have multiple sources suggesting that that's an area of struggle for price action right now. In addition to that, utilities And REITs also have light pink background colors, telling us that we don't have a strongly bearish posture like we do with energy, but we do have a weakly bearish posture that we'll want to be aware of. But do note the difference between utilities and real estate, and I think that can kind of jive with what we just saw a second ago there as well on the sector selector, because remember, utilities actually moved up one slot week over week, but they weren't able to go up nearly as much as real estate. Remember, those two often do work in unison with one another because they're both considered interest rate sensitive sectors, but it seems like real estate was the area that got the much bigger boost there from number 10 slot to number 8, whereas utilities only went from 11 to 10. But if we look back at this chart now, you can see a slight difference in those two charts. Utilities is still trading below its moving average, whereas real estate is trading above it. And we even saw separation in those two today, where utilities were down 0.95%. Real estate was actually up 0.31% today. So of the two, it looks like the price action on real estate has been a bit healthier than what we've seen in the utilities area of late. And you can see that the moving average has trended up as well there on real estate. So nice green tip to that moving average in that case. All the rest of the charts on the board are dark green, as you can see, so they would be considered strongly bullish according to the market forecast intermediate line. And of those big movers, I think most of our attention has been on communications, technology, and discretionary. Now remember, those three are heavily influenced at the top end by the biggest companies out there. In the case of communications, you're talking about Facebook and Alphabet. In the case of technology, you're talking about Apple and Microsoft. And in the case of discretionary, it's mostly Amazon, but you could probably throw in Home Depot for good measure. And remember, on these particular ETFs that start with X, so XLC, XLK, XLY, those ones are known as market cap weighted indexes. And so those stocks like Apple and Microsoft are going to make a much, much bigger difference than the smaller companies within those same ETFs. So you can see in all three of those cases, those stock charts look spectacular, and much of that is credit to those mega cap names that I rattled off there a moment ago. But you can see that from today's perspective, the winner was communications, up 0.94%. And I know some of those video game stocks, even some of the Chinese ones, were doing quite well today as I looked at our top-down trend trading portfolio, where we do have some exposure there. And I think that was aided in part by some rumors that the Chinese and United States trade deal talks are kind of back on again all of a sudden. So it seems like we had forgotten about that a bit with all this news with COVID and the elections here. But remember that we are still trying to work out trade agreements with China. Sounds like we might have made a little bit of progress on that front, which helps support the markets today as well. So communications, technology, and discretionary appear to be the strongest charts on the board from my eyes perspective. Let's take a look at another 12 grid here. In this case, let's talk about the asset classes. This will be chart 5A. Now, as this comes up, you can see we have three pink charts on this set of 12 grids as well, with the darkest pink color being the long-term U.S. Treasuries. So that would be a place you would go to if you wanted safety from your money. Remember, the U.S. government bond is viewed as one of the only risk-free investments that's out there. And I use that term loosely because there are some people that would argue that it's not risk-free. But it is true that unless the U.S. government goes belly up, if you loan them money for, let's say, 10 years, they will give you your money back in 10 years along with interest payments along the way with these treasuries. So that is an area that you will find is of interest in times of stress, economic stress. So treasuries did very well back in March and April when the stock market was getting clobbered. Now that the stock market continues to rise and rise and rise to all-time highs, investors have a choice. Do they want to go into so-called safe assets, or do they want to go into riskier assets? And right now they're choosing the riskier side of the equation because they're just getting more bang for their buck there. So U.S. long-term treasuries struggling on a relative basis there. You can also see that foreign bonds aren't that far behind, with a pink background color as well. And then gold is still that kind of light pink background color. And like I mentioned to you last week when I did the presentation, brace yourself. Don't be surprised if this is a time where we start kind of consolidating for a while to work off those massive gains that we had for much of the summer. I think there were a lot of people that got a little bit ahead of their skis as this thing was kind of, going crazy here, end of July, beginning of August. And the market may be doing its best to inflict a little bit of pain on people that are taking those long bullish or those bullish gold related trades. I don't think we have any right now. Let me just verify that because I know we had a junior gold miners trade going at once. No, we don't. That one has moved off of our books as of, I guess it would have been last Friday when that bull put spread would have closed out of the money and we would have captured max gain on that trade. So we no longer have any bullish gold trades. We do have an open SLV order. Some of you will remember I put that trade in and then was frustrated the next morning because silver gapped up huge that next day and I didn't get my trade filled, which spurred on the impetus of me trying to get our trades done during the middle of the trading day now. And therefore, those of you that are premium members to Market Scholars, I'll send you a trade alert before I announce what trade that was during this free video for everybody else that's just watching the YouTube version later that night. So again, if you're a premium market scholar, make sure you have access to our Telegram app and make sure you're checking out those trades when they come through. Anyway, right now we don't have anything to worry about with gold since we don't have any open trades there, but it is an area that I have a continued interest in, and I want to evaluate it at this level in particular where it's sitting at that rising moving average, and it closed just slightly below it today, so that's not a great sign, but not all is lost yet because we haven't broken down below the lows of where we were trading there on August 12th. So if we can catch a little bit of a bid in the coming days and it looks like we're going to bounce off this rising moving average, you might very well find that I will implement another bullish gold trading idea here in one of our upcoming sessions. But for right now, hands off, waiting to see how that plays out. A lot of our other charts look quite good. US dollar does not look good, I should add, but it does have a weekly bullish posture at this moment in time. It's just that I don't really trust it all that much because it's still still below a falling moving average, and so it might have had a little bit of a rally in the last week, but I could see this going back to a bearish posture very, very quickly if things don't pan out for it. Whereas I think I am much more interested in the price action of these bullish charts up at the top where we see more consistent strength. S&P 500 hitting all-time highs, strongly bullish posture. EFA, that tracks the foreign stocks from the developed perspective, not quite to multi-month highs, but you're knocking on the door of it. You're not that far away. It could easily happen tomorrow. And then EEM, which did have a little bit of a slippage about a week or so ago. Good thing it did stabilize around its moving average, and you can see for the last 3 days has rallied back up. We're now at new multi-month highs on the emerging foreign stocks out there, and that is our leader right now. In the last 3 months, emerging markets are up 21% versus only 15% here in the US and 11% in developed foreign elsewhere. So it's kind of those Chinese companies and Indian companies and Brazilian companies and Russian companies. They're all doing quite well. And remember, that's a good sign of risk appetite. When you see the more speculative areas of the world doing well from a price perspective, it's telling you that market participants are willing to take on risk. They're more interested in chasing a trend right now than they are locking down into something safer, as I addressed earlier in that discussion with the U.S. Treasuries. So I think that's positive behavior that we're seeing there. And you can also see high yield bonds bouncing nicely here today as well, not really following suit with the downward price action in the foreign bond market and the U.S. government bond market. So when high yield bonds, aka junk bonds, are doing well and going up like this, that's a healthy sign of risk appetite as well. Part of that was spurred on by oil, which was up another 2% here today and is near multi-month highs. Remember, a lot of junk bonds these days are oil stocks, and if oil prices can go up, a lot of those junk bond balance sheets will look a lot better, and they'll be able to fulfill upon the repayment of the bonds and the interest along the way. So junk bond traders are rejoicing when oil prices go higher. All right, let's get into our trade application example. Some of you might have saw a sneak peek of it a moment ago when I was looking at our monitor tab here. You can see that we have a new name in there, and that is 4. You can see right now it's a stock that may not be all that recognizable for some of you. Let me pull up let's just pull up a chart 4A, basic market forecast chart here, and I'll show you what kind of caught my eye with it here today. It broke out, and this is one I've actually had on my radar screen for quite some time, and I was kind of waiting for it to pull back, and it just simply did not want to do it. I kind of looked at it back here on these 2 days, and I was hoping it would come back in a little bit to around the $45 level. I'd like to see it come down there and then kind of start supporting itself around that place where it used its 45 as resistance back here in the first week of July. But it had other ideas. And you can see for the last 3 days, it's gone up. And today it touched a new all-time high at 53.44. Also had a new closing high of 52.72, which was above the prior intraday high. So we cleared any previous resistance. Anybody who's ever bought this stock in the past is now making money on it. And this is a company that competes directly with Square, for those of you that are familiar with it. So some of the small businesses that you might go to could be using Shift4 payments. I know there was one little place that I went to, a drive-in restaurant that I happened to notice as I swiped my credit card. This was the company that did that transaction. And so anyway, I have to believe that if we can get to a point where our economy opens back up, many of these companies that work with small businesses will benefit from that. And in the case of where we stand right now, where a lot of people are suggesting not to use cash and instead using kind of contactless payment systems, a lot of these fintech plays are really heating up here recently. So this is a newer stock to the marketplace. It kind of looks goofy on the chart as a result. You don't see a market forecast line plotted because there's not enough bars to go back and do that yet, but the background colors do still work, and you can see that the label works as well. The intermediate line on the market forecast for this company right now is at 87 and rising. So remember, that would put it about right in this kind of vicinity. I don't know if I can get on it or not, but it would be kind of like right there where I'm circling with my mouse. In other words, it's in the upper reversal zone. We would consider that to be strongly bullish. And of course, breakout, strongly bullish, and a newer company not a lot of people have heard of kind of results in more of maybe a speculative feel to this. There are various ways you could play it. Obviously, you could play the breakout itself. For those of you that want to play it a little bit more safely, one way to think about that is by selling puts, which is what I opted to do. And I sold I think it was the $40 put. So let's go over here and just double check that. Yeah, it was the $40 put in September that I sold. And I was able to get 45 cents for our fill price, which is directly between the bid and the ask for that here at the end of the session today. The bid was 40, the ask was 50. I did notice that after I sent out my telegram, there was a lot of volume that came through from maybe some of you that were considering a similar trade. Some of you might have actually gotten filled at a slightly better price than me. I see the last traded price was 49 cents. We officially got filled at our 45 cents down there. So that is a 1%, a slightly more than a 1% return on risk. And what that does, as a reminder for those of you that are newer to the idea of selling puts, is it puts you on the hook for buying 100 shares of this company at $40 per share if the stock does come down to those levels between now and expiration. And for those September contracts, that's 24 days from right now. So if you think this stock is going to remain either bullish, neutral by going sideways, or can even come down as long as it doesn't crash $13 per share, then this is a trade that could end up making you money as a result. But remember the caveat. If it does crash more than $13 per share in the coming 24 days, you have to be on the hook for buying 100 shares of that stock for every contract that you've sold at 40. But it'd be kind of a way to say, you know what, I missed the breakout on this one. I wish I could go back in time and get some advantage or some benefit from that. And this is a situation where you can say, yeah, if I could just simply go back to this day before they reported earnings, the last time this was at 40, if I could commit mentally to buying the stock there, then this is a trade that I could take and perhaps make a little bit of profit off of. So that's our trade application there, and as I mentioned before, many of you receive that via the Telegram trade alerts if you are a premium member of Market Scholars while the market was open. And that wraps us up for the night. So thanks for tuning in as always. Remember, if you prefer the full-length video like this, a half-an-hour version, make sure you're clicking like for me on Twitter. If you prefer the kind of scaled-down 15-minute version, then don't click like, and we'll see which side of the equation wins when I do the video again on Thursday. Until next time, I want to wish you all the best of success with your trades and your investments. Goodbye for now.